Hi, welcome to our topic, Going Concern. This is based on International Standard on Auditing 570. When we talk about going concern status, it's telling us that the business will continue its operation for a foreseeable future. So which means the company, with their ups and downs, will still continue their operation, not unless there is a sign that the company will not be able to continue as is. It is important for us to remember that it is a fundamental principle for financial preparation, and that will be the basis on presenting the report. Management is responsible for the assessment of entity's ability to continue as a going concern. Management needs to assess company's ability to continue its operation, and with different techniques, they will be able to know whether there will be signs that the company will be in financial troubles that might affect the operation of the business. So the factors that they need to be mindful of are degrees of uncertainty associated with the outcome of an event or conditions. In 2020, the world had encountered COVID-19 pandemic. It actually threatens the continuity of the business financially and its operation. Countries had imposed lockdowns and restrictions on travels, and different countries had faced economic depression because of this pandemic. So these are events that obviously companies didn't expected, not until it came. Another factor will be size and complexity of the entity, the nature and condition of its business, and the degree to which it is affected by external factors. For example, in an airline companies during the pandemic, countries had imposed travel restrictions, and of course, with these travel restrictions, they are unable to operate in their normal business. So, how these external factors, which is out of hand of the company, especially the airline companies, had been or might be affecting them in their business continuity. And then another factor will be subsequent events inconsistent with the previous judgment. So these are the kind of factors that the company or the management needs to assess or needs to use in assessing going concern status. As an auditor, our responsibility is to obtain sufficient appropriate audit evidence on the appropriateness of the going concern of the company in preparing financial statements. As I mentioned a while ago, going concern is a fundamental basis in preparing financial statements. Another responsibility of the auditor is to conclude, based on evidence obtained, whether material uncertainty exists about the entity's ability to continue as a going concern. As an auditor, we shall evaluate management assessment of entity's ability to continue as a going concern. In evaluating management assessment of entity's ability to continue as a going concern, the auditor shall cover the same period as that used by the management to make its assessment as required by applicable financial reporting framework, or by law or regulation if it is specified a longer period. Now, if the client had assessed the going concern or the continuity of going concern for less than 12 months, we have to request the management to extend it at least 12 months from that date. In evaluating management assessment, the auditor shall consider whether management assessment includes all relevant information of which the auditor is aware as a result of the audit. So we have to know whether the management had already provided all the relevant information which may affect our assessment. The auditor shall evaluate whether sufficient appropriate audit evidence had been obtained regarding and shall conclude on the appropriateness of management use of going concern basis of accounting in preparation of financial statements. Of course, based on these evidences, we may be able to provide our judgment on the continuity of the business. Based on the auditor evidence obtained, the auditor shall conclude whether in auditor's judgment, the material uncertainty exists relates to events or conditions that individually or collectively may cast significant doubt on the entity's ability to continue as a going concern. A material uncertainty exists when the magnitude of its impact and likelihood of occurrence is such that, in auditor's judgment, appropriate disclosure of nature and implications of uncertainty is necessary for case of the fair presentation financial reporting framework, the fair presentation of the financial report, or, in the case of compliance framework, the financial report not to be misleading. Okay, so there are two things that we have to be mindful of in our auditor's conclusion. Now, if the going concern assumption is still appropriate, but there is a material uncertainty exists. When you talk about material uncertainty, these are factors that might cast doubt on the continuity of the business. But still, going concern assumption is appropriate. In other words, we're telling that these are factors that might affect the operation or the continuity of the business, but still, the continuity of the business is appropriate, or the going concern assumption is still appropriate. Now, if the material uncertainty is properly disclosed, so as an auditor, we will issue unmodified opinion with emphasis of matter paragraph as provided in ISA 706. If not, then we have to issue qualified or adverse opinion, of course depending on the pervasiveness, based on ISA 705. If going concern assumption is not appropriate, so which means we have evidence that the company may not be able to continue their operation, and if it is disclosed appropriately, then we have to issue unmodified opinion with emphasis of matter paragraph based on ISA 706. If it is not disclosed, then we have to issue qualified or disclaimer of opinion, depending on the pervasiveness of the situation. That is based on 700 or ISA 705. When management is unwilling to make or extend its assessment of going concern when requested by the auditor, a qualified opinion or a disclaimer of opinion in the auditor's report may be appropriate. This is because it may not be possible for the auditor to obtain sufficient appropriate evidence on the use of the going concern assumption. ISA 570 requires the auditor to communicate to those charged with governance, or let us say the board of directors and committees created by the board, events or conditions identified that may cast significant doubt on the entity's ability to continue as a going concern. This communication include whether a material uncertainty exists, whether the use of going concern basis is appropriate in preparing the financial statements, and whether the disclosure in the financial statements are adequate. The communication requirement of ISA 570 is consistent with the requirement in ISA 260. Communication with those charged with governance, and discussion regarding communication of audit matters with those charged with governance. And that's it for our presentation. Thank you for your time.